Okay, so speaking of home prices, phenomenal transition, Justin. Have you done this before? That's great. Home prices surge in April at a truly extraordinary rate. So this is the S&P Case-Shiller. This report comes to us from CNBC. Basically, home prices in April saw an annual gain of 14.6% in April, which is up from a 13.3% increase in March. Among larger cities covered by the index, 10 city composite, 14.4% year over year, was up from 12.9% in the previous month. So this is a huge gain. April's performance was truly extraordinary. The 14.6% gain. And producer Matt, can you show that chart? It looks like a fake chart. Like it looks like a chart that a kid would draw. Look at the end there. It just kind of goes. So for those of you audio listeners, it's kind of down out in 2010 and 2012. It's under the line, -2, -4, and then it skyrockets in 2014 all the way up 11%, and then it kind of starts to go down again, and then from late 2019 to 2020, it's basically a straight up line. So April's performance was truly extraordinary. The 14.6% gain in the national composite is literally the highest reading in more than 30 years of the S&P CoreLogic Case-Shiller Index data, said Craig Lazara, managing director for the global head of the investment strategy in S&P Dow Jones Industries. Very interesting. You can read more about this, but is it kind of the same thing happening in Canada? Are you seeing a huge increase in prices, or is it just kind of normal? What's happening where you are, Justin?
Yeah, so it depends on primary, secondary, tertiary markets. That's how I like to break it down. The primary markets are the Vancouvers, the Torontos, and the Montreals. We did see spikes, but not as high as in previous years, because in previous surges pre-COVID, those were the markets that were increasing like 20 to 30%. And meanwhile, we're in these secondary and tertiary markets like London, surrounding area, being like, this is nuts. Like we were 3 to 5% a year. Then we jumped to 17%, which was really high in the 2017 to 2000 market, which was great. But you know what COVID did for our markets? 47% was the increase in value in our market. 47%. So people last year buying houses are selling them literally for pretty much twice as much. This year, it is leveling out. So we run the Canadian Real Estate Networking Room, which we did this morning. And you can see across the country that real heavy COVID surge is tapering off, because all you could do for a year was buy houses in Canada. And now people can go buy underwear and do other things. And all of a sudden,
interesting,
it's really tapering off. And I think we're going to balance back out at that 10 to 17%, because I do think markets like London are undervalued. And it just caused what would have happened in probably 5 years to happen in one. But I think we're going to go back to stable appreciation, which I think we're all pretty excited about to see some stability in the marketplace.
What's the average price of a home where you guys are?
600, but in 2013, it was 275,000, just to give you some context.
Say that one more time so that can compute.
Yeah. So I was running conferences in 2013 talking about London. The average price was $275,000. Single family home, detached, great product. Wow. Now that same home, the average price is $600,000.
That is why, and so a lot of that is the growth of Canada itself. But you said that the whole pandemic increased about 50%. Panty, yeah, the whole panty. So are you seeing a disparity between the lower end availability of inventory and then the higher end luxury, or are you seeing luxury still moving very quickly too?
Honestly, you need to know how to surf in this market. It started off as everybody was rushing to the lower end. So anything 200 to 500, 50 showings, 15 offers, like we were seeing 200-300 over asking. Those people got heavily burnt out. It actually moved to luxury for about a 4-month period. So people were listing houses at 900. They were selling for I saw as high as 700,000 over asking price on one property. And again, people got heavily burnt out in that space. And then it kind of went back to the mid-range, somewhere in between. But what I have noticed is happening in a big way. People are changing what their buying product was going to be. So instead of buying a single family detached home as your first house, maybe you're buying a townhouse or a condo. Or instead of buying a $500,000 house in Byron, maybe you're driving 40 minutes outside of the city. You're going to live in the country. It's not maybe as set as a neighborhood as Byron, but it's growing.
So you're seeing a change in the buying habits, which we'll get
Mhm.
into a little bit of that when we talk about the pools thing. Dan, in California, are you guys seeing the same types of increases? Is it more tame than what it sounds like from our northern brother?
No, they're actually about the same. I haven't looked back to 2013 numbers, but that's a crazy stat, and I can only imagine, what it would look like in California as well. But we're seeing, everything. It really depends on the market, bottom third, middle third, or upper third. What the over asking is. Everything is over asking now. While that is chilling, and I'm going to cover that a second. While that's calming down, everything's over asking. But I got into escrow on one property, 400, almost $400,000 over asking a couple weeks ago. So, and that's in LA. LA is a crazy, insane market right now when you get up into that 1.2 and above range. But my main concern here is these numbers we're reading. These are the reports that consumers can see, right? So my biggest concern is that these numbers are essentially ancient at this point. We're 2 months gone from April, and with how quickly this market changes, they're seeing things like, oh, okay, well, the market's still going up. But is it though, or is it settling? And have they missed kind of the peak if they're trying to predict it? These are the things that I really worry about, and I think it's our job to make sure that we need to keep our clients and our consumers that are following our feeds and our email chains and all that stuff. We need to keep them current. I think it's our job. I think it's our duty. I think it's our responsibility to keep them current because things are changing so rapidly right now. And there's a couple articles coming up that are going to kind of, say buyer fatigue and all that stuff.
Yeah, we have. So in this article that I was just covering, it does mention, although home price growth is reaching new highs, the risk of price declines has fallen far below the pre-pandy in the summer 2006 levels when home prices last peaked. This is likely because of favorable mortgage rates, continued income growth, and the ratio of mortgage payments to monthly household income much lower. That was Selma Hepp. She's deputy chief economist at CoreLogic. Consequently, elevated buyer demand coupled with lacking for sale inventories will continue putting pressure on prices, which Logan kind of talks about in his article, which we'll cover here shortly.